Hey guys, Spooky T here. Volume. Is it a money printing machine? Well, today we're going to try to answer that question. Can you make consistent profits from the market using nothing but volume and price action? So that's all we're going to need for this strategy. So, as you can see, we're going to start here at 9:30 Eastern Standard Time because that's when cash open is for the New York session. And you can see this huge spike in volume here. So what I like to do is I like to treat the top of this candle, since it's a selling volume, I like to treat the top as a resistance, and I like to play it off of that. And if we get a break and a flip of this candle, I'll be looking to take the opposite position. So let's fast forward a few candles and we'll see what we got. Alright, so now we have a big spike in bull volume. So what I'm going to want to do is draw a line at the bottom of this candle. And this is now our range. So if the price breaks below this line with all these buyers, then I'm going to be looking to go short because all these buyers will be trapped. And if the price breaks above this line, I'm going to look to go long because all of these sellers are trapped. See, as you can see, the minute that the price hits the top range of this candle where all these sellers were, the sellers tried very hard to push the price back down. And what we're looking for is a close above or below these lines. And here we go. This is the 1 minute chart on NASDAQ futures, by the way, as I'm sure you can see. So what we're looking for now is a pullback, and we're going to look to go long. It's a decent pullback, so for the stop, we'll probably put the stop below the biggest bull volume. Really, it should probably be way down here. But since we had a couple touches right here, I'm going to put my stop right here. And we'll at least go for a 2 to 1, roughly. Alright, just like that. Just like that, we're making money. So another thing that I like to do is, as time goes on and we get more and more volume coming in, I like to take these normal spikes of volume, so it's not so much abnormal as it is like above the average volume that we had been getting. So this is pretty significant volume, and a lot of the times volume can either indicate breakouts or a continuation, but it could also be what's known as finishing volume. So if price gets super overextended in one direction, you get a huge spike in volume, then that could actually indicate a reversal. So we'll mark this out and we'll see what it does if it comes back down to that price and how it interacts with it. But until that does happen, I'm going to be treating this volume spike as support. Alright, and now we got a huge spike in selling volume, so we'll draw up the top of this, kind of extend this out a little bit as well. And this will be our new range right here. So I'm looking to go short up here if we get rejected, and I'm looking to go long down here as a support. And we will buy right here. See, buyers stepped in to defend their positions right here, just like that. And now, in order to hold this position for a long period of time, what I want to see is I want to see how it interacts with these bars of selling volume. So the first obstacle will be this candle with this volume, then this one right here, and then finally this one. But I only really like to mark out the most significant spikes in volume. So as you can see, little bit of resistance here just to get through. These sellers are trying to keep it down. And here you go. Now we're getting a close above this. So what I would expect to see now, if price is bullish, I would expect the next candle to wick down into this area and all of these sellers to close their positions, which would drive the price even higher. There we go. So that's another pretty solid trade right there. I can actually draw this out, as you can see. Multiple touches. Makes sense from a market structure point of view, you know, as how this was one high and then another high, and it broke, made a new high, and retested. But another reason why this works is because this happens to be an area of interest where traders were going short and then ultimately got forced to close their positions because they were lucky enough to close them out at a break even if they were short right here, which invariably causes the prices to rise from that point anyway, because in order to close their position they actually have to be buying. So that's the whole strategy in a nutshell. It's pretty good. Give it a try. I really enjoy using volume as an indicator. I think it works very well on its own, but it works even better if you combine it with other things and other strategies. So that's about it. See ya.